It's Monday pre-market, and NIO finds itself in a familiar but pivotal position. After a week that saw the stock trade with heavy swings, falling as low as $4.45 midweek, before rebounding strongly on Friday to close at $4.81, up more than 8% on the day, the company now enters a new trading week with both optimism and caution hanging over it. The story heading into today isn't just about NIO. It's about the broader macro picture and how geopolitical events could shape sentiment across the markets. With a scheduled meeting between Donald Trump and Ukrainian President Volodymyr Zelensky taking place during the trading session, investors are preparing for the possibility of volatility, and that includes NIO shareholders who are closely watching for the stock's next move. Let's break this down. First, NIO-specific action. The stock's close at $4.81 on Friday marked its best single-day performance in several weeks, regaining ground it had lost in earlier sessions. That rebound came after a bruising Wednesday session where the stock fell sharply before finding its footing again. What's significant about Friday's move isn't just the gain, it's the volume and tone behind it. Traders were looking for signs that buyers were willing to defend NIO's position in the mid-$4 range, and Friday offered that confirmation. It also reintroduced the possibility of a run back toward the critical $5 threshold, a level that has been psychological resistance for some time now. Heading into Monday, aftermarket trading on Friday saw NIO hold steady, suggesting that the rebound wasn't just a one-off but had some staying power. Still, the question remains, can NIO build on this momentum, or will broader market conditions weigh it back down? That's where the geopolitical context comes into play. The Trump-Zelensky meeting, happening during U.S. trading hours, is set to be a headline event. Markets don't like uncertainty, and when world leaders meet in the context of ongoing conflicts and global instability, there is always the potential for volatility. Energy prices, currency movements, and investor appetite for risk assets can all be influenced by the tone and outcomes of such meetings. For growth stocks like NIO, which are already sensitive to market sentiment and interest rate expectations, this is particularly relevant. If markets interpret the meeting as productive, with signs of de-escalation or cooperation, it could provide a lift to equities across the board. If tensions rise or uncertainty increases, it could lead to risk-off behavior, pulling stocks like NIO lower. Zooming out, let's look at the EV sector as a whole. NIO isn't operating in a vacuum, and its peers often provide valuable context. XPeng, Li Auto, and BYD have each been facing their own market pressures. XPeng has been dealing with delivery concerns, while Li Auto has been fighting to maintain growth momentum. BYD, on the other hand, continues to show strength in China, though its stock has not been immune to broader market volatility. When you look at these companies collectively, one thing stands out. Despite near-term challenges, Chinese EV makers continue to expand capacity, innovate, and push for stronger positions in the domestic market. Investors, however, remain cautious given macroeconomic concerns in China, rising competition, and questions about profitability. For NIO specifically, short interest remains a central storyline. As we've discussed in recent videos, NIO continues to be one of the most heavily shorted names in the EV space. That makes the stock particularly volatile when conditions shift. Friday's rebound, for example, likely saw some short covering as buyers stepped in, creating upward pressure. Heading into this week, traders will be watching closely to see whether shorts increase their positions again or if momentum shifts toward the long side as investors bet on a retest of $5. This tug-of-war between shorts and longs has been one of the defining features of NIO's trading pattern in 2025, and it's unlikely to change anytime soon. From a technical standpoint, NIO's ability to reclaim the $4.80s was an important step. The stock has now carved out a short-term support level in the mid-$4s, and traders are looking at $5 as the next resistance point. A clean break above $5 could signal further upside and potentially attract more momentum traders, while a failure to hold current levels could open the door to another retest of $4.50 or lower. For investors, this means paying attention not just to headlines but to price action, which often tells the story before the news does. Now, let's consider the macroeconomic backdrop. U.S. markets are still digesting mixed signals around inflation, interest rates, and economic growth. Federal Reserve commentary in recent weeks has emphasized patience, with policymakers signaling that rate cuts are possible but not guaranteed this year. For high-growth names like NIO, interest rate expectations matter. Lower rates generally improve investor appetite for riskier growth stocks, while higher rates have the opposite effect. If the broader market starts the week on a strong note, Buoyed by stability in global headlines and a steady outlook from the Fed, NIO could ride that wave higher. If markets open on a weaker tone due to geopolitical uncertainty or macro worries, NIO may once again face downward pressure. There's also the China angle to consider. Economic data out of China remains mixed, with consumer demand recovering unevenly and government stimulus measures having only partial effects. For NIO, this means a tough operating environment at home, even as it looks to expand its presence in Europe and beyond. Investors are weighing whether NIO's long-term strategy of innovation and brand building can overcome near-term financial challenges. That tension between short-term headwinds and long-term potential has defined the NIO investment case for years, and it remains front and center heading into this week. So where does that leave us as we head into Monday's trading session? The key takeaway is this: NIO is holding steady after a volatile week, showing resilience in the face of market swings. The $4.81 close on Friday gives investors a sense of momentum, but the stock remains highly sensitive to both sector-specific and macroeconomic news. With Trump and Zelensky meeting today, markets could see heightened volatility, and NIO will likely move in tandem with broader risk sentiment. Investors should be prepared for intraday swings and watch for how the stock reacts to both technical levels and breaking news. Looking ahead, the story for NIO remains one of patience and perspective. The company continues to innovate, expand, and position itself as a player in the global EV market. But in the short term, its stock will be driven as much by market sentiment and macro conditions as by company-specific developments. For those holding NIO, the key is to stay informed, watch the levels, and remember that this is a stock that can swing quickly in either direction. As we start this new week, the big questions remain: can NIO retest the $5 level and hold it? Will the market take the Trump-Zelensky meeting as a sign of stability or instability? And can NIO's recent show of resilience turn into something more sustainable? Those are the questions investors will be grappling with as the market opens today. For now, NIO remains a story of cautious optimism, with a potential for both opportunity and risk in equal measure.